What's going on, everybody, and welcome to bootcamp day number 3. Today we are going to be going over price action and how to use price action to confirm entries. But real quick, before we hop into it, you guys need to do your daily check-in. So comment down below giving your check-in and let's hop right into it. Also, make sure to smash that like button and make sure you're subscribed to the channel if you're not already. I am uploading every single day for the next 31 days for this bootcamp. So yeah, if you're not subscribed, you're definitely missing out. All right, so in bootcamp day number 2 yesterday, we went over the individual candlesticks that I personally pay attention to, as well as volume. Today we're going to be piecing that together, which we kind of did yesterday, but I do want to add more context of what we are actually seeing on the screen. So when looking at actual price action, and I believe over the next few days I'm going to be showing you guys how to actually find levels of importance. But to add on to what we discussed yesterday, like I said, we do want to pay very close attention to the wicks, because the wicks are going to tell us the overall story. If price pushes all the way up to here and then sellers sell price all the way back down to here, what is that telling us? Sellers are active in that area. If you piece it together with the volume, that was the largest volume spike right here on the 5-minute time frame since way over here. What is that telling us? Sellers are active, and yes, this is a green candlestick, and no, I am not colorblind. This is just how I like to have my candlesticks. The blue one is going to be a green candle. The black candle is going to be a red candle. So looking at this green candle right here, even though it was green, look at this upper wick and piece it with the volume. Sellers were active. This was the highest volume we had since way over here. What's more than likely going to happen? Price is going to drop, and sure enough, there it went. So it's going to be very important to pay attention to the wicks, because we're not always going to get a bullish hammer, a bearish hammer, a greystone doji, a dragonfly doji, a normal doji. But if you actually look at the wicks and you look at the volume accompanied with the wick, that is what's going to tell you the story, and that is where reading price action is going to come in handy. So what we're going to do is we're just going to look at a few different charts. Right now I just have the NASDAQ futures pulled up on a 5-minute time frame, but we're going to look at NASDAQ, and then we'll look at the S&P 500 futures, and then I'll just pull up some random stock after that. Regardless of what you're trading, price action is going to be very, very important. And again, when we piece it together with levels of importance going into these next few days, it's going to give you a better understanding on confirming a long entry, a short entry, or if you shouldn't even be trading at all. So if we are looking at the NASDAQ today, actually here's a really good example. As we can see in the morning, price dips down to the downside, buyers buy it up. So we have this nice lower wick right here, nice lower wick right here, nice lower wick right here. Yeah, they sold it off right here. But as we can see, price pushes to the upside. It tries to break above this high point right here. But what do we notice? Small body, wicks are about equal on both sides, maybe a little longer to the upside. This one right here, same exact thing, small body, nice little lower wick. However, that upper wick actually got longer. Now, if we look at this next candlestick, small body, small lower wick, but look at this upper wick. And judging by the overall price action right here, we can sit here and assume that sellers are very active in this area. And piecing that together with the volume, as we can see, we get a low volume push up, denial. Right here, a little bit of spiked volume lower than the previous one. But then on this one right here with this super long upper wick where they tried again to push it above these highs and hold it, look at the volume right there. Look at the volume spike. Piecing together the volume spike with where that longer wick is, we can conclude that a majority of this volume came from the sellers up here. And then from there, what ended up happening? A nice little dump to the downside. Price tried to bounce right here, and then they weren't able to hold it, and price continued to flush to the downside. Now from there, what ended up happening? We talked about bullish engulfing candlesticks yesterday, so price flushed all the way down into the opening print towards the low of the day. We get this red candlestick right here, but then a very large green candle right here that swallows up the previous candle. What does that tell us? That there are very strong buyers in this area. And then from there, what do we get? Another bullish engulfing to the upside. So looking at this, we could then say, okay, buyers are showing their presence right here. And then watching the next candlesticks, we can see buyers try to support it right here. Buyers try to support it here. And then price dipped down into this FVG, which we will be talking about in a future lesson. As we see, price comes down, wicks into the area of interest, and then buyers bought it right back up. If that did not confirm an entry for you, well, the next bullish engulfing candlestick definitely did. So if you didn't get long here, which again, we will talk about sniper entries and how you can use them to skew the risk reward in your favor. But if you didn't get long here, this definitely confirmed it right here. Piecing together the price action with an area of interest with the volume lets us know, okay, the buyers are here. We have more green volume right here than the two previous red candlesticks right here. We have a level of interest. We have a nice lower wick right off of that area. Let's try a long entry with a stop loss right below here. Or when we go into future lessons using a sniper entry, you could have gotten long maybe around here, maybe up here, depending on the lower time frames, with a stop loss right below here. And as we can see, price pushes up into a new high a day. We get a nice little pullback, but again, look at those lower wicks. They are supporting it. So buyers right here, buyers right here, buyers right here, nice little dragonfly doji, and then they push it up into a new high a day yet again. Price pulls back. They hold it right here, and then price continues going up from there. So that's just a little rundown of today. And I know that this is in hindsight because this already happened, but I am doing this every single day live inside of Team Bull. I am telling people exactly where I am entering trades and why I am entering trades. So once you're able to fully understand the price action and the volume, that is really going to help you understand, okay, is this a good entry? Is this not a good entry? So let's just go ahead and look at another example right here just because I saw it. So as we see, this is in the overnight session on the NASDAQ futures. Price ends up pushing to the upside. We have a nice little pullback right here, pullback again, and then pullback. But look at this volume compared to the two previous red candles right here with this lower wick right here. What is that telling us? Buyers are present in this area right here. Also at the same time, again, we will talk about fair value gaps in the future, but what do we have? Fair value gap. So wicked right off the area, volume came in, nice little bullish candlestick. Sure enough, what ended up happening? Price continued to push to the upside. Maybe you didn't get long right here. Maybe you wanted to wait for a candle close above this area right here. If that happened, where was your entry? Right here. And as we see, price continues to push up, pulls back, buyers, 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 and sure enough, what happens from there? Next leg up, nice bullish candlestick, bullish engulfing, continue to push, 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 and then eventually we top out and start dropping to the downside. Let's head on over to, I do want to say, in scenarios like this, when we do consolidate, just try to avoid it. So as we see, this was on Tuesday on the NQ futures. This was actually a really nice candlestick right here, and we will look at that. But as we can see, price ended up dropping in the morning. A lot of sellers over here, price ended up dropping. And then we had this very high volume lower wick right here. So again, this is how you could have used price action to understand, okay, this might actually be a bottom. And if you had an area of interest down here as well, that would help confirm. So as we see in the morning, price ends up dropping to the downside. And then on this large flush down, I want you guys to notice this. Look at this very bearish candlestick right here. Large flush to the downside. Price continues to drop right here. And I remember actually watching this as price dipped to the downside. A lot of volume started to come in during this candle right here as we dropped, and then they pushed price back up. What is that telling us? There are a lot of buyers in this area. This is the highest volume candlestick since the open. Look at the opening volume compared to this volume right here. This is letting us know that yes, there are buyers in this area. So as a result, again, using smaller time frames, sniper entries, you could have gotten long on this candle right here, or maybe you wanted to wait for a little more confirmation before getting long. But again, a majority of the volume started to come in down towards these lows as buyers started entering the market. And then from there, we have a nice bullish candlestick, bullish candlestick, bullish candlestick, a little upper wick right here. But again, that's not going to scare you out of a trade. Push to the upside, and then we go into this consolidation right here. Being able to identify consolidation is going to be very important as well, because when we're consolidating, you typically want to avoid taking any trades. So this right here, this was just chop. But then from there, as price broke below that consolidation right there, we then pull back. It might have been to a Fibonacci. Let's see. Let's take this pivot low right here to a pivot high, right to the 50% retracement. Bingo. So we have an area of interest. Again, we will go over on how to find these areas of interest. Price pulls back. We have a very nice bullish candle. Look at that lower wick and then piece it together with the volume. So nice bullish candlestick, a very long lower wick, heavier volume since all the way over here. And this was selling volume. So a lot of buyers coming in, get long with your stop loss right below these lows. Again, looking at the price action, combining it with the volume and a level of interest, then confirm the trade and price pushed into a new high of day. Here's another really good example on NQ. So as we see in the morning, price pushes up and then it flushes to the downside. But what I want you to notice, again, the price action, look at that lower wick, look at the volume. What can we conclude? A majority of this volume came in from this lower wick right here. As price dipped to the downside, buyers were buying it up, and as a result, a majority of the volume ended up coming from there. Next candle, we had a low volume retest of that area right there. Again, buyers absorbing the sellers, giving another bullish candlestick right here, nice bullish wick, and as a result, what happened? Price pushed to the upside. I actually believe we even took this trade inside a team bull. I'm like 99% sure this is the actual trade that I ended up taking. So very nice bullish candlestick and price action over here. A little later in the day, what do we notice? Price comes down, tests that area again, even over here. Again, notice high volume spike, lower wick. What can we conclude? Buyers are in this area. Again, later in the day, price comes down, tests the area again. A lot of volume comes in compared to the previous volume candlesticks right there. And what happens? Price pushes up, comes back, sets a higher low, and then pushes from there. Let's look at one more example on NQ, and I'm actually curious if this was a retracement right here. Let's take this pivot low. Let's take this pivot low to pivot high, and sure enough, that was a retracement zone. So as we see on NQ a little later in the day, pivot low, pivot high, price flushes to the downside, buyers enter at the 50% retracement, nice little dragonfly doji right there, and then price dips down, look at the lower wick, look at the volume. Again, highest volume that we have had actually since here, right? But highest volume before that all the way over here, which is telling us, piecing together the wick with the actual candlestick and the volume, buyers are entering at this 61.8. At the close of the candle, you get long, stop loss right below this low. Price came back down, retested it again, held it as support. If you didn't like any of this price action right here, this bullish engulfing definitely got you interested in the trade. And then from there, what ended up happening? Price continued to push to the upside, came down, set a higher low, and then continued to push back to the upside. So that was just many examples on NQ on the 5-minute time frame, the Dow Jones futures on the 15-minute. All right, so here's the Dow Jones on the 15-minute time frame, and right off the bat, you can see an area of interest right here. As we see in the morning, price continues to climb to the upside, price pulls back. Look at this 15-minute candle right here with that volume spike. Highest volume that we had since way over here, plus two nice lower wicks right here. So we can conclude, again, more than likely a majority of that volume came in down here as buyers entered the market. Price then came down and retested it again. Again, a nice volume spike with a nice lower wick right at that same exact area, and then buyers entered the market, push price even higher. So that's one example. Let's take a look. Let's go right on over here. So as we see to the upside, as price continues to climb on the 15-minute time frame, we start climbing on lower volume, which is typically a hint that more than likely price is getting ready to top out. And then as price pushes up, we can actually see that this candlestick is the same size as this candlestick over here, but the volume is slightly elevated. What can we conclude from that? That more than likely there's some selling activity going on up here. And then the next candlestick, a lot of volume comes in, and then price pulls to the downside again. I don't know exactly what ended up happening, if there were buyers right there, or if a lot of the selling ended up happening up here. But then from there, price started to flush to the downside. A very bearish candlestick right here with a very small lower wick, and then price sits here, breaks, sets a new low, and then continues to drop to the downside. If we head on over, let's see, that's right off the open. Let's continue right on over here. Right here is actually a really good example. So as we see, 15-minute time frame, going into the market open, price is just consolidating, but as the market opens, this is what I want you guys to notice. Price wicks down all the way down to here, buyers push price all the way back up to here. This candle then consolidates, this candlestick then comes down, retests the same exact level, and then engulfs both of this previous two candles right here. And then from there, price pushes up, sets a higher low, maybe at a fib. Let's see, pivot low, pivot high, right at the 50% retracement. So again, using a smaller time frame, could have sniped an entry right off that 50% retracement, maybe the 5-minute, 2-minute, 1-minute, whatever it may be. Very nice candlestick right here. This was actually a very nice one as well. Price dips down to the downside, pretty much hits it there, hits it right here, confirming an entry long. And then from there, as we can see, price pushes to the upside. And then we finally start getting some selling activity. So there was a lot of selling going on right here. Very huge 15-minute volume spike. And then as we can see, next one's a gravestone doji. Price kind of sits here, consolidates. And then the final push to the new high a day was an inverse hammer with elevated volume, again, higher volume than these previous candlesticks right here. And then look at the upper wick. As a result, what is this telling us? More than likely, price is ready to drop. Then we get a bearish engulfing. Price then goes into consolidation. Again, using smaller time frames, maybe there was an FVG. You can see that there is a 15-minute FVG right here. Maybe there's one on the 5-minute, whatever it may be. And then price ends up continuing to drop to the downside from there. We can look at this example over here. Price continues to push up in the morning, sits in consolidation. Again, this is what you want to avoid because there's literally like, you can't read this price action at all. Like the wicks are pretty much the exact same. The only thing I could say is these two wicks right here because you know, the upper ones, they're slightly higher than the lower ones right there. So we have these two longer upper wicks right here. Price then pushes into a new high day. But what do we notice at the top of this uptrend on the 15-minute? A gravestone doji, which we talked about yesterday in bootcamp day number 2. Gravestone doji, elevated volume, which is telling us what? Sellers are active in this area. And then from there, we get a consolidation candle and then a nice flush to the downside. And then finally, we're going to look at the S&P 500 futures, but this time on the 30-minute time frame. So price action you can literally use on any time frame. It just really depends on what time frame you want to validate your setups. So if we're looking at the 30-minute time frame on the S&P futures in the overnight session, as we can see, price is climbing to the upside, climbing to the upside. And then from there, what happens at 8:30? We have this nice upper wick right here. Elevated volume, maybe news based. I don't know exactly what happened on whatever day this is, July 27th. Maybe there's news, but look at the upper wick. Nice selling volume right there. Price then consolidates. On the very next 30-minute candle, what happens from there? Price then has this nice little doji, and then the following 30-minute candlestick from there, what happens? Bearish engulfing. This is letting us know that price is more than likely going to drop. So what are we going to wait for? We're going to wait for some kind of retracement, whether it be an FVG. We got a nice 30-minute one right there. So here's our 30-minute zone right there. Price comes up and it dojis inside of the FVG, which tells us what? Buyers are uncertain about pushing prices higher and that sellers are actually active in that area. So you could then get short at the end of that candlestick, 46.22, stop loss right above here, 46.26, 46.27. And what happened from there on the 30-minute time frame? Flush to the downside, small body candle, flush, flush. And then we're just going to take a look at this example right here. Again, we went over the S&P 500 yesterday on the 15-minute, but as we see, we got nice buyers right here, nice buyers right here. Price consolidates, breaks into a new high day. Price comes down, sets a nice dragonfly doji, pushes price higher. And then on the 30-minute, at the end of the day, we got this nice upper wick to the upside with very heavy volume. Now, again, I know this is the end of the day, and that's typically where the volume is going to be elevated. But again, nice upper wick, bearish candlestick, and what happens in the overnight session? A nice little drop to the downside, nothing crazy. And actually, we'll just do one more example. So as we can see, 30-minute time frame on the S&P 500 futures, very bullish candlesticks to the upside. Price continues, 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 and then we have this small candlestick right here. So we have this small green candle, lighter volume, and then the next candlestick engulfs the previous. What is that? Bearish engulfing. So again, what can you do? Use smaller time frames to identify setups, but we did have a nice little bearish engulfing candlestick right there. And then from there, what happened? Price continued to flush to the downside. So that is going to wrap up bootcamp day number 3. Hopefully that helped you guys read overall price action. And then going forward, when we start piecing together levels plus the overall price action and volume, that's really when you're going to understand, okay, is this a good entry? Is this a bad entry? Should I wait for more, etc.? So if you guys did find value in bootcamp day number 3, what I need you guys to do is comment down below letting me know. Again, make sure to do your daily check-in. Let me know that you guys are still rocking with me. And if you haven't already, make sure to smash that subscribe button and make sure you guys have that bell notification on so you are notified every single time these boot camps are uploaded. But that is going to wrap it up for today. So as always, I hope everybody has an amazing rest of your day, and I will see you guys in tomorrow's upload for boot camp day number 4.